Hello friends, very good evening. Welcome back to my YouTube channel, Talent Trader. Those who are new to my YouTube channel, kindly subscribe the channel to get more update on intraday and positional trading strategies. And this video, I'm going to discuss about the algo trading strategies and how to create a Tradetron algo trading that I'm going to discuss in this video right now. And here I'm going to show you how to create that conditions in Tradetron algo and best algo trading strategies that I'm going to backtest you right now. So how that backtest is work. So this is what a quantman algo and Tradetron algos are different and quantman algos are different. So we can use any one. And I'm going to create a strategy, and we discussed earlier about the strategy. Now I'm creating the strategy how the algo trading strategies works. So I'm going to backtest from 2020. It's almost 2 years. Almost from 2017 onwards, it was possible to backtest from this website. And what I'm going to do with the Banknifty. So the simple conditions which I'm going to do, I'm not going to make a complex one. So the simple condition which I'm going to take a Banknifty. So I have added a Banknifty here, and this is what the conditions. I'm using the time-based condition on ATM straddle strategies. The simple one, I'm going to use time-based conditions. That is what ATM short straddle at a particular time frame. The time frame which I'm focusing at, I want to take a trade by 9:30. So after market open in the first 15 minutes, I leave it, and I'm going to enter my trades at exactly the 9:30. The time of the day is equal to the time which we are going to make 9:30:00 seconds. This is what a condition when my entry is going to trigger. Okay, and on second condition which I'm going to make exit conditions, the time of the day is equal to somewhere around 3 o'clock 10 minutes. That is what 15:10:00 seconds. So simple condition which I have made. And what the algo is planning, at 9:30 it will take a short straddle and it will keep exit that position by 3:10. So that is what the condition which I have mentioned here. And I'm going to make weekly option straddles. So whatever the weekly options, here it is a strike price is based on the future or future index. And options that I'm going to add two legs. One I'm going to sell a call, and another one I'm going to sell a put option. So how much stop loss I'm going to make it? I'm going to make 30% stop loss from my entry point. So each leg. Okay, both I am going to sell. So the condition is very simple. I am going to take a call and put both at sell at exactly at 9:30, and I keep each leg as a 30% stop loss, and it is, or if any stop loss or not happen, that position is going to squared by 3:10 p.m. So this is what a simple conditions. From 2017 I have given the back test here. So let me try to do it. So 9:15 to 3:25 is that maximum time trading duration, and maximum entry per day is 1. If you are making the entry 2 or 3, so it will be after exit your positions, it will take another position. So we are going to take only one position with the algo trading strategies. Let me run the back test. What will happen? Wait, and how much profit we are doing the back test from somewhere around 2017. So let's last 5 years, what would be the, so in the last 5 years we've seen a maximum movement in Bank Nifty and maximum down in Bank Nifty, and big spikes also we have seen. So a lot of conditions, if you are testing the strategy with a higher time frame, it will see many fluctuations, even higher fluctuations in a live market that it's seen. So let me wait, it's running right now. The same one which we are going to create in Tradetron. Tradetron is the almost 2 years, 3 years old one. So there is a lot of brokers can add, but in the Quantman algo, the newly launched one, and let's look at that. What was the profit which is generated? Almost 5,41,000. So what the strategy will simply tell us, if I am doing this strategy and over the period of time, I got a yearly 1 lakh rupees profit by using this simple strategy with the algo trading with the Tradetron or Quantman. simple strategy, and over the period of time it was generating you some quite amount. If I'm starting with the 2 lakhs, maybe it is more than 250% return. And let's look at that maximum profit on day in 14,000 and 18,000 is the loss, and consecutive 19 win and 8 loss, 1.2% risk per trade, and maximum drawdown is about 40,000, near about 38,500 by 81, so nearby 40,000, and accuracy about the system is 66%, and average profit on the daily is about 1,796. So here you can get full details, almost lost in 5 years, 1 2 3 4 5 6 7 8 9 10 11, so almost 11 months were in negative. So 1 2 4 6 7 8 9 10, and 11 months were negative, remaining are minimum profit or profitable months. So almost we are taken 16 months. 11 months where we ending with the negative, and this is the month 2022 having 15,000 is the max loss, I think. So the strategy is very simple and powerful, that is going to give you major profit. But if you are running the strategy by over the period of time, if I'm run the strategy for a 1 week or a 2 week or a 2 days, and after 2 months if it is consecutive losses, if I'm not continuing means you cannot see this kind of profit. It is a slow and steady kind of straight strategy which we are going to make from our thing. So now what I'm going to do, so how to create this code on Tradetron Algo. The Algo Trading Strategies with the Tradetron Algo is another algo trading platform where I'm going to create a Tradetron. So if you want to create a Tradetron accounts, I have provided the link in the description. You can copy the link and you can create your account. So with that account you can log in with your credential. After create that account, I think they are charging some smaller amount. So this is what one of the strategy which we are selling, a call and put both together, the same kind of strategy, but it is a simple one which I have created. Now I am showing you how to create the strategy exactly, which is going to create how to create it. Okay, so that I'm going to create a strategy. First of all, and Bank Nifty, let me go for a 930 short straddle. Short straddle strategy. So whatever the tags you want, you can give. I am given you arbitrage, some whatever the tags you can give you, and title, the description. So same we are going to copy and paste it. And exactly 9:30 I'm going to take a sell option. So we have entry conditions here. I'm going to add the conditions which we are going to take. The time condition, the first one is the time, must NSE must be greater than or equal to number. We are going to mention in a number, the number is 930. So this is what a format where we are going to use 930. So this is what first condition I have submitted. This is what a first condition. I'm going to add the another conditions, whatever the trade which we are going to take. So this one time only is good enough. If you want to restrict the positional thing, so you can restrict here. Simply we can do this at 9:30. Exactly the time is 9:30 or above. So the strategy will start run, and what kind of position it is going to take. So I'm going to make the strategy is going to take a short position in Bank Nifty options. That I'm going to check NFO. I'm going to take first call and add the Bank Nifty, and I'm going to MIS or NRML. So I'm going to make NRML. So it's simply it's a ATM options and current week options, and the lot size is 1. I have added, and same like that I'm going to add a put options. Same Bank Nifty, ATM options, NRML, current week. Here I'm going to take current week only. Bank. Here it's a put option. So NRML, ATM, current week. So we can create here ATM, a fixed strike price, or we can use a formula also to find out the strike price. So we are going to simply find out the ATM strike price. It will directly find out the strike. It is depending on the current price, current future price. So I have added 2 legs. What is happening here? That the time is greater than 9:30 at that time. 9:30 it will take sell a call and put option based on Bank Nifty future strike price, and it will take a trade. It will sell both the options. Let me go to make a stop loss. This is what are important conditions where we are going to take here, the repair one. So what it must to do, right? So how to make a stop loss. So for example, what was the trade which you have done earlier? So LTP, okay. So the LTP of traded instrument, that means already traded, that instrument got already traded. So where it is traded, the entry price, entry price, LTP, go to check entry instrument, and I'm going to select underlying, that is what a Nifty Bank. They add Nifty Bank. And what was the set number 1, condition number 1 and leg number 1? That means here, let I show you. Here it is a set number 1, leg number 1 and condition number 1 and leg number 1. That meant it coded the calls, the traded instrument name LTP, right? This must be greater than or equal to, okay, traded instrument. That means that we are going to initially we are created the LTP price of that Bank Nifty. Now we are taking the entry price, the traded instrument entry price. We got it entry and the enter price and underlying asset of Nifty Bank, and set number 1, leg number 1 and condition number 1. So we added. So what it measures, that traded instrument, it recalls the entry price. Okay, so that entry price multiplied by we are going to take entry price is greater than, the LTP is greater than or equal to entry price with multiplied the percentage. That means the number we are going to make the percentage, how many percentage it must be going up. The number, so let me go to check 1.03, 30%. Just wait, just it's at 1.3, it's a 1.30, 30% from your end. So let us assume you are taken a entry at 100 rupees. Okay, let us assume you are taken at entry at 100 rupees. What it measures, if the price of that particular LTP, for example, the LTP, it must be crossed more than 30%. That is what the conditions which we have mentioned on our previous quantment strategy that we are going to make here. Let me wait for it. I'm waiting for. So what I'm going to do here, the simply your entry price on this option may be 100 rupees. Okay, if it is 100 rupees, if it is entered at 100, and this is what LTP. So LTP, it must be greater than, where we are mentioning the condition is greater than. So here the traded entry price, that means 100 multiplied by 1.3, that comes under 130. Okay, so if the LTP is greater than 130 or equal to greater than 130, the position we are going to exit from the trade. That is what the conditions we made here. I am going to submit here, and whenever this condition meets, I am going to add the position. I am going to buy that leg which I have traded. That was a call is the leg which is traded on that, and Nifty Bank NRML, and current week, and the lot size is 1. Here some conditions we are going to add, which strike price we are going to exit. That means there are some instrument traded. Okay, the traded instrument entry, here we need to make strike price Nifty. Here it called Nifty Bank. Nifty Bank, going to make Nifty Bank, entry strike price. Here we need to careful about that field strike price, and here set 1, leg 1, condition. What it means, whatever the strike price is taken at the starting around 9:30, that strike price we are calling it. So it will call the strike price, and current week lot size 1 I am going to add. Simple, that one leg got triggered. So what we have done, so at 9:30 we have taken an entry in both sell, call and put, and then we are going to make a 30% stop loss for a call strike, and again we are going to make uh, another stop loss for a put option. That we are going to simply do here the same conditions, but I cannot able to copy it. So traded instrument LTP of traded instrument, an entry instrument Nifty Bank, the bank that we are going to focus. Okay, and here set number 1, condition number 1, and leg number 2, second leg, which is what a put option. This is also we are going to expect greater than the condition is traded instrument name, that we are going to get the price of that particular option where it is traded. Entry price Nifty Bank, open here. You can take Nifty Bank. Nifty Bank. Okay, and same one condition set number 1, condition number 1, leg number 2. Okay, that price it must be greater than multiplied by number 1.0 per 1.30. So this will help. So you can add the bracket open and close also. You can use the function where it is. You can use the bracket open, bracket close. That is what will help you exactly the price. So this is what a open bracket here, and we mentioning that condition. So I'm going to, if this condition is satisfied, I'm going to exit that put option. NFO here the second leg is put and Nifty Bank, and I'm going to take my instrument, and here we are going to use the formula to find out the traded strike price, traded instrument strike price based on the price entry price, not a price, it must be a strike. Here I'm going to take the bank, and here again one set 1 leg 1 conditions. I'm going to click OK, and it will find out the exact strike price which is traded at that time of 9:30. Lot size I'm going to make 1 lot, so I have added here, then position leg is added. So what I'm doing at 9:30, I'm taking a position at exactly the time of 9:30, both call and put I'm going to sell, and each leg individually I'm making a 30% stop loss, and then this one will going to exit whenever I'm going to exit. Universal exit is around 3:15 or 3:10. So here that I'm going to make the time. The time is on NSE greater than or equal to the number 15:10. That means 3:10. So we will exit at this. So we are not making any target for a fixed 1,000 rupees or 2,000 rupees or 3,000. Nothing we are doing it. Simply the entry condition is on 9:30. Whatever the price, entry 9:30, exit 3:10, and the stop loss for the trade for each leg is about 30% from entry. That is what the condition which we have created here. And let's look at that after making the conditions. Let the same one which we are going to this result which is happening on last 5 years from 2017. So the same which you have created. If you want to copy that code, so sorry, you can make that make use of the conditions. You can create your own code, or if you want to any coding which you are required to do, I can help you. So the capital required is around 1.8 lakhs for that, and whenever it is going to after exit my trade, it must be reactivate after 12 hours. So that means once the trade is done and after 12 hours it will be around after 3 o'clock, after 12 hours it will be activated, and the next day it is automatically taking your trade, and the conditions which you are going to make 1 minute. So all other things are right. So you can create the strategy, and once they created, I'm going to deploy it. Either you can deploy in live trade or live offline or live auto. So just I'm going to apply in a paper trade with a 1x or 2x lot size also. You can fix this 930 short straddle which we have created on Tradetron Algo Trading, that may be helping you to make trades. So this is what I'm expecting to create with the strategy, and this will automatically take a trade by tomorrow, and it will be I keep on continuous the conditions wherever meet. It's based on the algo trading. So thank you for watching this video, and if you want to create even a different strategies for algo trading in Tradetron, that I will help you, and with the small charges I can you can pay me, I can create you the strategy which you want. And thanks for being with me, and thank you for being my channel, and subscribe my YouTube channel. Thank you for watching this video.